Hello, this is Nathan Carlson coming to you from the 24 Hour Flex Studios, and this is Cafeteria Basics Part 2. How do you get reimbursed? Complete a claim form, which is available at 24hourflex.com, and it's also included in your enrollment kit. Attach receipts and fax the claim form to the number on the claim form. Claim forms that are received in good order are usually processed within 24 hours, weekends and holidays excluded, and you'll receive a reimbursement usually within 2 to 3 days via check or direct deposit, depending on what you've elected. We encourage you to elect direct deposit if you have that option. An acceptable receipt must include the date of service and the service that was performed. It must describe that, at least in some measure, and must identify the vendor providing the service and the cost of the service. Canceled checks are not eligible receipts. Also, credit card statements are not receipts. We have to have the receipt from the merchant or the medical professional, daycare professional that provided the service to you. Explanations of benefits, EOBs, and bills are okay. Most Flex plans also provide debit cards. These are a key benefit to you because they provide immediate access to your Flex accounts. Receipts are required for these debit cards unless the charge equals a copay, the charge is equal to a previously approved expense, or the merchant that you're using the card at has installed this IRS-approved inventory system. And many merchants have installed this. This includes Safeway and Kroger's and King Soopers and Walmart, Walgreens, Target. These all have the IIAS system in place. In fact, 85% of debit card swipes auto-substantiate, meaning no receipts. Thousands of no-receipt merchants exist throughout the United States. There is an updated list at 24hourflex.com if you want to look at that list. It's important also to go ahead and keep your receipts just in case we ask for additional information. Your cafeteria plan runs on a cafeteria plan year, and generally expenses must be for services rendered to you during the plan year and while you are a plan participant. So in this example, it's a calendar year plan. The services must be rendered to you from January 1st through December 31st. The key point is the date of service, not when you pay the bill and not when you receive the bill. Now let's look at a plan that has the IRS grace period. Some plans use the IRS grace period, which allows an additional 75 days after the end of the plan year, which would be March 15th for a calendar year plan, to actually incur medical expenses or daycare expenses. All plans have some sort of run-out period. This example assumes that the run-out period is 90 days after the end of the plan year. Participants have 90 days in this example after the end of the plan year to submit eligible expenses for reimbursement. In this example, that would take you to March 31st. There's also great online access. You can go to 24hourflex.com and click on My Cafeteria Account. Follow the instructions. Make sure you turn off your pop-up blocker. Online, you can view your account balance, your transaction summary. You can create a claim form right online and attach receipts. You can order additional debit cards for you or your family members. You can view pending payments and receipts. The final rule is the use it or lose it rule. Any money left in your account after the run-out period is forfeited. Where does it go? It doesn't go to me, it's returned to your employer. So you must plan wisely so that you avoid forfeitures. What happens if you terminate employment during the year? Well, you can be reimbursed for eligible medical expenses that are incurred prior to your date of termination. You can also spend down your daycare FSA with eligible expenses after your date of termination. What happens if I terminate employment during the year? Well, you will have the normal run-out period available to submit eligible expenses. If your employer is subject to COBRA, you will also have a COBRA election on the medical flexible spending account. In summary, cafeteria plans provide tremendous tax benefits, but it's important that you know the rules, know your company's run-out period, and read your 24-hour Flex enrollment kit and your company's summary plan description. Thank you very much.